Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Looking at the biotech sector, and there are times where I'll refer to individual names as biotechs, and they're in the pharmaceutical sector, but the correlations between the two are very strong, especially the reaction to Trump this past week, which was a bullish reaction. So let's look at XBI, IBB, LABD. Not going to look at LABU just because the chart is pretty much exactly like XBI. And then we've got AGN and CLVS, some individual names. So starting with XBI, we have a very strong reaction to Trump back on Tuesday. And then very healthy consolidation. This ended up being a bull flag with leading to continuation. So the day after that 4% plus move was very important because if we saw a down day of 1 or 2%, we would know that there was a lot of profit taking going on. But the fact that we hit a higher high and we saw bulls buying the dip those 2 days following that 4% day, we knew the bulls were holding on to those gains and they were very strong. And we saw that continuation and a close at the high of the day to end this week. So very, very strong. We broke the previous high of 65.95. So this lower high pattern that has been in place since the reaction to the election has broken, and it was a very long, drawn-out period of consolidation, filling the gap back to the downside. Then we had a bounce attempt, higher low, higher high. So momentum is certainly favoring the bulls into next week. This is the chart to be looking at because you can see these lower highs very clearly, and we had higher lows, and the range was getting very, very tight. And we have now gotten above the 100-week resistance that rejected the last bounce attempt, and also above that level. Increase in bull volume, bullish MACD cross, close at the high of the week. There was a pattern we were watching to be looking at for a break of this tightening range, and that was right there. That was the downtrend resistance line. There's your uptrend support line. We knew a break was imminent, and there it is for the bulls. So very clear bullish break on the S&P 500 biotech sector. IBB is seeing some strength, the NASDAQ biotechs, but not as significant. You can see that high has not been broken. 287.17. We are still over $4 below that level. So it's very similar action in reaction to Trump with holding those gains and then continuation. But again, the overall weekly chart does not favor the bulls yet like it does XBI. So there's a potential play. Maybe it's a laggard. We can play IBB looking to follow XBI, but this lower high pattern is still very much intact. And we've been doing biotech videos pretty much over a year now, and we've always been pointing out the subtle differences on the weekly chart. One of them being here where we had our lower high and lower low, where XBI had higher lows and higher highs at that point. So the bulls are holding on to the 200-week moving average support, all moving averages support besides this 100-week, and need to see a break of 287.17 to be in the same position, the same bullish position that XBI is in. So with this reaction, LABD, the biotech bear, is very weak. You can see just a dump, a bear flag, continuation to the downside, lowest prices we've seen in over 3 months. And we look at the weekly chart, and these are all-time lows, and that's because time decay is a factor as well. So the biotech sector is certainly not at all-time highs, but because of time decay, LABD is at all-time lows, very clear downtrend over the past year plus, and looking, there's no support. We're going to see a reverse split in LABD eventually because it is designed to go to zero with time decay eventually. We are going to see the price keep dropping down. I'm looking at support of $12.91, $12.50, and $12 psychological levels, but there's no support to be looking at, and we'll be watching for that reverse split to come. Shorting LABD has given some nice gains in the past year. Individual name AGN. We were watching AGN because of the very bullish consolidation after this breakout. So this is the same psychology as a bull flag of normal healthy consolidation leading to continuation. And after a bull breakout, that was certainly to be expected. Look at the 100-day moving average resistance. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 rejections. So we knew back on that reaction to Trump on Tuesday, once we closed above that 100-day moving average resistance, that's your go signal. That's when we started looking at AGN very seriously for a bullish play. And the follow-through couldn't have been any better. And we're still seeing follow-through, holding the upper Bollinger Band in breakout mode. 229.21. It's going to be in the low 230s to start next week. Inside candlestick on the daily. Bulls want to see a break of 232.23 on Monday. The weekly chart is what had me liking AGN because of that breakout. Even though we're in a downtrend, we had the breakout, and there you can see 3 weeks of normal, healthy consolidation. On the first week, the bulls bought the dip. Nice long lower wick, holding the middle Bollinger Band. Second week was a doji of indecision. Third week, a doji of indecision. But what stands out to me is how contained this consolidation is. Pretty low volume, trying to hold that middle Bollinger Band, and that's a perfect bull flag pattern leading to continuation and a huge breakout week following through. So in order to break the overall downtrend, we have to break 261.27. So there's still a lot of work to do. That is over 10% from where we currently stand. We have the 50-week moving average resistance of 232.41. So keeping an eye on AGN to try and break the overall downtrend. Let's zoom out and get a longer-term picture of things. The 3-year time frame. So we had a very bullish 2014, 2015, and then the trend changed, lower highs and lower lows, but the bulls are trying to change it back in their favor. I don't think we're going to shoot right up to 261. We're going to have to keep forming higher lows and consolidate healthy along the way, like we just did before this last bullish week. CLVS also extremely strong, and this has been a lead biotech bull that we've been watching, and that is because every single dip is getting bought. We are bouncing off this middle Bollinger Band daily support, continuation, 2 days of consolidation, continuation, bearish reversal candlesticks getting negated left and right, but even the gap down with a downgrade on Friday, bulls bought the dip and closed up near the high of the day. So the gap fills to the upside at 64.75. We haven't filled it back to the upside yet. And the high we've seen on this move is 67.16. So you might be saying, how is this chart so strong? How are the bulls able to pull this off? You look at the weekly time frame, and I need to zoom out a little bit here, but we're looking at the gap. We're filling a big time gap. We gapped down from $96 down to $35, pretty much giving up 2/3 of the stock price and 2/3 of the market cap. As soon as we broke the high of that bounce attempt, 36.42, the bulls had all the control because of the very insignificant resistance. There is no price action in this gap to be looking at. So it's all psychological levels that we're looking at. And the bulls are just riding the upper Bollinger Band support in breakout mode for a month straight. Higher lows and higher highs, tons of strength. So losing this weekly upper Bollinger Band will be a red flag that some consolidation is coming. But as of right now, there's no indication of that happening. And we are watching this name with a lot of confidence for the bulls. That being said, if we see a break of the higher low pattern, I'm looking at $60 psychological, the low of January 30th. That's a key level. If we break $60 support, we will be looking for potential normal healthy consolidation like what occurred here at the end of December. So that's the biotech sector. We are bullish the biotech sector, watching it all week. Nice plays there, and we'll see what kind of follow through we get next week with the close at the high of the week. I hope you have a great weekend. I appreciate you watching, and we'll see you soon.